Hi, I'm Evaldo Albuquerque, editor of Exotic FX. Thanks for watching. Today I'll show you how you can use copper to help you with your currency trades. Copper is known as Dr. Copper. It's the metal with PhD in economics. Copper is used across many industries, so when the global economy is booming, copper tends to move up. And when the global economy is slowing down, the price of copper tends to fall. So you can use copper as an economic indicator. Let's take a look at a daily chart of copper. Notice that late last year, copper was basically moving sideways. And these two converging lines created a consolidation area. This was an area where there was a balance between buyers and sellers. It basically formed a triangle. When there is a triangle, you want to wait for a breakout and then trade in the same direction of the breakout, because the price usually moves in the same direction of the breakout. So if there is a breakout to the upside, you want to buy, and if there is a breakout to the downside, you want to sell. In this case, earlier this year there was a breakout to the upside. Remember, late last year there was a lot of fear that we would have another global recession because of the European debt crisis. But when copper broke up to the upside, copper was basically saying we would not have another recession and the global economy was much better than many expected. So this was the first indication that the global economy wasn't so bad. So when there is a copper rally, you should focus on commodity currencies such as Australian dollar, the Mexican peso, and the South African rand. Those currencies tend to rally against the dollar when the price of copper is going up. And that was a great call from copper, because all those currencies rallied against the dollar at the beginning of this year. But notice that once again, copper has been moving sideways and has created another area of consolidation. There is a new balance between buyers and sellers, and that created a formation known as box. Once again, you want to wait for a breakout. If there is a breakout to the upside, that means copper will most likely move higher. And copper will be telling us that the global economy is not as bad as it looks. If there is a breakout to the downside, copper will be telling us that the global economy is slowing down and it will most likely move lower. So if there is a breakout to the upside, you want to buy commodity currencies. And if there is a breakout to the downside, you want to buy the dollar against those currencies. And that's basically how you can use copper to help you with the currency trades. So next time you're thinking about buying or selling commodity currency, make sure you take a look at copper first. Thanks for watching.